Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, as always, thanks for coming in.
Always a pleasure, mate. Always a pleasure.
Now, before we get your insights, let's take a look at how the various markets have performed earlier in the day. We'll start with Bitcoin and the crypto markets. Bitcoin is at just above 40,000, which is at 40,517. It's up 0.32%. Ethereum is at 2,634. It's up 5.86%. Now, if we look at stock markets across the region, we start with the SGX, and that's at 3,177.35. It's up 0.77%. Bursa Malaysia is at 1,582.08. It's down 0.02%. The Nikkei is up 0.95% at 29,438.89. But Shanghai is down 0.9% at 3,557.33, and the Hang Seng is also down 0.76% at 28,622.75. The ASX 200 is up 1.05% at 7,388.80. Rounding off the numbers, we've got the Kospi, which is at 3,256.98. It's up 0.15%. Now, it's a very mixed trading day, Jeff. What are the drivers for the various markets?
Well, I think it's ex-China, so we'll deal with China separately. So most of Asia is higher ex-China today. So if we look at Australia, Singapore, Japan, as you said, South Korea to a lesser extent, I believe they're following the US markets, the S&P 500, and particularly the NASDAQ. They both, that climbed 0.7% overnight, but both the S&P 500 and NASDAQ closed at record highs, and I believe that's what's driving Asian stocks higher. China is a little more murky today. There's a couple of things going on there. The PBOC withdrew some liquidity today, 10 billion yuan at the repo, but also there's a story running around on all the major news wires about this nuclear power plant, which is almost brand new, that's in the Pearl River Delta, partly owned by the French, who have raised the alarm, and they've said there's some unusual gas buildups in the reactors there. And I think that is weighing on market sentiment in Hong Kong and mainland China today. That's an evolving story which your viewers should be monitoring closely.
Now, there's also another China story, which is inflation. Inflation fears have been spiking in markets again because driven by shipping costs in China. Could you walk us through some of the COVID issues that are in fact impacting global inflation?
Yeah, look, I mean, in China itself, the southern China, one of the provinces, Guangdong, has a COVID-19 outbreak there. It seems to be fairly small in scale, but the Chinese authorities are being extremely cautious about letting ships coming in and out of port, and also with the general restrictions on the populace there as well to prevent its spread. That's slowing even more this unloading and loading of goods from that very key transport hub, and that is pushing up freight prices. Freight indexes, the Baltic freight index, for example, they mostly fix in London in their afternoon, these indexes, but they're all pushing record highs. So this is yet another supply chain bottleneck, pushing up inflation, well, pushing up prices, and therefore inflation further down the track.
Now, to give our audience a perspective of how this has impacted timelines, you can normally a ship is waiting off these ports less than a day, they are unloaded and off they go. Now it's up to 16 days of waiting. So that's a huge impact on global trade.
Yeah, massive. And yeah, because everybody runs on just-in-time orders these days, this is what supply chain manufacturing has been built on for decades now, just in time. That works really well when everything runs just in time, but as soon as it doesn't, then you start getting bottlenecks and disruptions through the manufacturing process. But also we could have delays for goods being shipped out of China as well, and with ships parked up for 16 days when they should have been in another part of the world. You've got to go and find another ship at short notice. then you've got to charter it, and that costs a lot of money as well. So the whole thing becomes the snowballing effect through the economic value chain, and that will inevitably lead to higher prices in the shorter term as costs go up.
Now, Jeff, all eyes on markets on the FOMC meeting today. What are they looking out for?
Well, I mean, it's a 2-day meeting, so we'll get the results tomorrow US time. So that'll be very early Thursday morning for all of us down here in Asia. I'm not expecting any change at all from the FOMC language or their dovish outlook. I think the biggest risk is perhaps some of the governors or the committee members bring forward some of their rate hike dot plots in this dot plot of expected timelines of rate hikes. But I think they'll be extremely careful, having talked transitory inflation for the last few weeks very vociferously about trying to undo that good work. I think in the markets, we're perhaps going to see bond yields rise into this meeting just as those long positions are unwound. We've seen the dollar has rallied in the last couple of days. Again, this price action all looks like pre-FOMC shuffling and reducing of risk into the meeting, not a change in structural sentiment.
Now, final question. What are the key events and data points we need to look out for that will move markets this week?
Well, we've got a few bits and pieces. Obviously, the FOMC is the one ring to rule them all, but we do have US industrial production and retail sales and PPI tonight. I think that of that, the PPI will be the most interesting because they actually include services in their calculation, whereas most other countries don't. So that has the capacity to be quite a bit higher, I feel, than what the market's expecting. So I think plus 0.5% month on month. If it was to come in higher than that, we might see bond yields rise again and the dollar strengthen. We also have the same data set from China tomorrow, retail sales, industrial production. They're probably going to be a bit less spectacular than last month's, but I think as long as they stay roughly around consensus, that will be okay. I think there's external factors now driving those Chinese markets, including this nuclear power station, which I suspect will run for a while yet. After that, I think post-FOMC, that the data calendar is pretty much second tier.
Now, Jeff, thanks a lot for coming in on the show.
Always a pleasure, mate.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTechs, our Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.